Okay. And we are back. We are back. So we've finished Unit 6. Now we want to move on to Unit 7. Now Unit 7, as you can see, is very few slides, literally 3 slides there that we need to look at. And I'm sure you guys may recall, I did say, if you can do Units 1 to 5, you already passed this one. Honestly. Like if you're 100% with that, then you pass this one. Maybe I should actually say 1 to 6, because just in case they give you the journals on the periodic inventory system. All right? So but if you can do those units and, you know, whatever question they can throw at you, trust me, the rest is really just extra marks to either get you to a distinction or just get you to your, I know some people are just, me, 50% say I'm fine. Okay. All right. It's okay. I'm here to help you get what you want. So if you're here to get a distinction, let's get it. All right. If you're here to get through this module and never see me again in this textbook, that's fine. Let's get that done. Okay. But anyway, going to Unit 7, guys, these are your marks because it's so simple. All right. All you need to do is understand what exactly is going on. And in Unit 7, what's going on is we have your individual debtors and individual creditors. Okay, that's what we're discussing in Unit 7. Okay, so as we know, a debtor, all right, or accounts receivable, this is what they typically term it in American accounting speak, all right, are people, all right, or entities that owe our business money. Okay, so this is obviously an asset to us because we're going to get an economic benefit from this. Okay, then creditors are the exact opposite. All right, these are people or entities that we owe, the business owes money to. Okay, and then once again in American accounting speak, this is accounts payable. All right, and I think maybe you might have come across these terms if you had accounting before. Okay, then second slide that we have under this unit. Typically, money is owed or owing. All right, so whether we owe someone or someone owes us, these amounts of money are typically paid in either 30 days, 60 days, or 90 days. All right. Then the business keeps an individual account of each debtor or creditor. The account has a running balance, okay, which is updated after every transaction with the party. Why do we do this? Yes? 100%. And if there's any disputes, all right, so maybe just for the sake of those who are online, just in case they didn't pick up what was said, we want to be able to identify exactly how much we owe or how much is owed to us with each individual that we are obviously transacting with, whether they're a debtor or a creditor, okay? Now, this is important because if there's any disputes between your debtor or your creditor, you can then go back to your books and say, on this day, you purchased so much trading inventory, or we purchased so much trading inventory, or we paid off X amount, okay? Bringing the account to this balance, all right? So that's why we want to record every single transaction with these individual debtors or creditors. Goes on to say, all debtors or creditor account balances are then subsequently listed on a debtors list or creditors list, which is reconciled with the debtors control account or creditors control account in the general ledger at month end. Now, these two things right here, we've seen before, and we've actually been playing around with, okay? The debtors control account is a summary of all of the individual debtors that I had. Does that make sense? So if I want to see how much money is owed to the business in total, I'd look at the debtors control balance. Okay? If I want to see how much the business owes to its creditors in total, I'd look at the the creditors control account. Does that make sense? Okay. Now they mentioned something interesting. They mentioned a debtors list and a creditors list. Okay. We'll have a look at that a little later. Yeah, we'll have a look at that a little later. Okay. But then on those pages or thereabout, you can then see the structure of those individual debtor accounts or individual creditor accounts. So let's have a look at that quickly. All right, just so that we can actually see what it is that we are actually playing around with. Okay, so actually I think I'd rather take you guys to example one. Example one, the debtors ledger. I think that's a better example so you can actually see entries in it as well. So if you look there with Mr. Suleiman, I'd assume it is. Okay, there you can see balance brought forward. So that's basically what he was owing on the 1st of August. Can you see that? The 24,348 Rand, 73 cents. That's how much he was owing on the 1st of August. Whenever you begin with your debtors, your individual debtors or your individual creditors, we want to start with, same thing we ask ourselves in the T account. Was there an opening balance? All right? Then we begin to say, okay, what were the transactions that took place? Okay? So, here, the good thing about this journal is that we don't need to actually write in details whether it was a sale or it was a return, etc. All we do under doc number is literally write the source document. Invoice, can you see that? INV 47. So can you see this is a copy and paste job? Because they have to give you the document number or the document type. They have to give you that information. If you look under details of transactions, on the second it says sold goods to Solomon for 4,000 plus VAT. Issued invoice number INV 47. So can you see? You're just copying that invoice INV 47, you plug it in, you put in the date. The code, if you look at code is basically telling you, flip one page back. Code number one, credit sales according to duplicate credit invoices. Okay. Code number two, increases in previously issued credit invoice by means of a debit note. Okay. So those codes basically tell you what type of transaction. So they will always give you the code if they want you to actually do codes. Usually they don't want you to waste that time doing that. Why? Because literally, once you have this key of codes, all you need to do is read the transaction and you know, okay, so we're selling goods on credit. So that's number one under the code. So can you see, it's not rocket science. So that's why usually they don't even bother to give you a codes column in your assignment or test or exam. Okay. Then can you see on the second what happened? He bought 4,000 worth of goods, and can you see that it said plus VAT? If you see something and it says plus VAT, what that tells you is that that amount is exclusive of VAT. You have to find the actual VAT inclusive amount, 100%, or the VAT amount, depending on what it is you're actually doing. Always. For you guys, especially, I would be shocked if they tell you in a question that is 16% or that is 14%. Because the thing is, in your textbook it's 15%, all your exercises is 15%. The only reason that workbook it says 14% is because we designed that workbook before we adjusted that in 2019, I think. So yeah, 2019 thereabout. So that's why. But otherwise, for the sake of consistency, if they were to do that, for me personally, I'd see it as unfair. Okay? Because they've been training you on 15. Okay. But anyway. So there, we're using 4,600 because obviously we're getting the VAT inclusive. Remember, whenever we're dealing with the debtors, we use the VAT inclusive amount. So that's why it's 4,600. Okay? And can you see? Again, we're applying our principles that we learned in Unit 1, Unit 2, Unit 2, Unit 3, where we said, okay, since he bought and he's a debtor, are we going to debit or are we going to credit? Is his account increasing or decreasing? It's increasing. What he owes us is more now, right? So then, do we debit or credit? We debit. So can you see, you just need to work yourself through that logic. And so since his account is increasing and we're debiting, that means his balance is also going to increase. Can you see that it's now 28,948? Okay. So that's why I say this thing is easy. It literally is a thing of understanding what just transpired. Is that going to increase his account or decrease his account? And you're consistently asking yourself that question when it comes to the individual debtors or the individual creditors, because that's all the transactions you're doing with them. Either you're buying more from your creditor or you're returning to your creditor. Does that make sense? Or you've got a settlement discount. So it's either increasing or decreasing, increasing or decreasing. So you're either debiting or crediting, all right? Based on whether an increase or decrease, how that affects your debt or your credit. And then obviously, adjusting the balance is literally just mathematics. If you don't know how to plus and add and subtract, I don't know if you should actually be here, all right? I can't really help you if you can't do that, okay? Right, so that's just an illustration of the individual debtors. You go to the individual creditors, I see there's an example there, 7.2, and you see it's exactly the same structure. The only difference is here now we're dealing with someone that we owe. Same principle, we sit down and we ask ourselves, is there an opening balance? And then let's see what happened on the third day. On the third it says received an account statement from DW, which shows the outstanding balance is now 67,392.44 cents due to interest charge. Issued journal voucher number V30 to record the interest. So literally, can you see there under document number, we write journal voucher V30. All right, and then you can write in brackets interest, but either way, all I need to see there is what type of source document is this? What's the source document number? And then we know that in the folio, can you see how that maybe might be the other thing that you just need to apply yourself a bit. To say which journal was affected when we did this, the initial transaction, okay? And then again, you're asking yourself, is my creditor's account increasing or decreasing? And then should I debit or credit as a result thereof? All right, and then adjusting the balance. All right. So that's all that I wanted us to go through today. All right, just wanted to touch on the theory of learning unit 6, close that chapter, and then obviously do the theory for learning unit 7, as we have done now. And then when I see you on Friday, we will then obviously do exercises in learning unit 7, okay?